In this video, we're going to talk about all things to do with the recession, which is going to be here soon. We'll talk about when it's going to show up here and affect you, things you can do about it so that you land on your feet. We also have to talk about a few other things, such as who else is trying to assassinate Donald Trump. I also want to show you an article I found that's not that old, but it's a little bit old, where they're talking about Newmont mining shares hitting a 5-year low. I was also going through a lot of charts last night, doing some late night research, and I kept saying out loud, that's an ugly chart. That's an ugly chart. And these are the main indexes. I'm talking about the Russell 2000, the S&P 500, the Dow Jones Industrial Average, the NASDAQ. These are warnings showing you that we are potentially going to be seeing a lot lower prices to come next. Plus, I'm going to tell you the number one most important thing you need to know about the recession.
You help yourself and people just like us when you click the like button.
And the banks are about to start releasing their Q2 results. And just like I said about the mining companies that had higher gold prices for a long time through the Q2 period, so their results will be even better, the banks are the opposite of that, because there's a lot of office buildings where they have a mortgage out for the office building, but there's not a lot of people renting out space in the office buildings. So the organization on the hook to the bank doesn't have the money to pay for the mortgages. You're going to start seeing a lot of increased loan loss provisions, lower earnings from a lot of the banks when they start reporting. There's a lot more problems going on here than the vast majority of people seem to be realizing. Here's a chart of the Dow Jones Industrial Average. And this setup here, this indicator, tells you that prices are most likely, on a probability basis, to go lower next. Here's the NASDAQ. Here's the Russell 2000. Here's the S&P 500. They're all telling the same story. I'd be cautious right now. If you're in the markets, I'd be cautious. And just like I've been telling you guys to get out of the high-flying stocks like NVIDIA, look what's going on with the shares of NVIDIA. This overreach is starting to come back down towards reality. You might remember in January 2021, that's when President at the time, Donald Trump, took out Soleimani in a drone strike. You'll probably remember that. But ever since then, the Iranian regime has had their sights set on Donald Trump. They intend to try to get him back for that assassination on Soleimani. What's weird is that the Secret Service knew about this, and they still let some kid climb on the roof of the building next door to Trump and shoot at him when he was talking. Here's an article published February 22nd. Newmont's stock heads for 5-year low as gold and copper miner cuts dividend and plans asset sales to maximize profit. And so what happened since that point? You can see that when you're looking at articles, when they're talking about how negative something is, or everyone needs to be getting out of the same investment together. What happens a lot of times, that's where it's a turning point, where that investment starts doing better, when everybody else got scared out of it. To have bought Newmont Mining at the exact point where they made that headline, talking about Newmont hitting a 5-year low, and how they're cutting the dividend, since then, the shares have performed incredibly well. And this is not just Newmont Mining. A lot of mining companies are doing wonderfully well, and you can't blame them. I mean, the price of gold right now is over $2,400 an ounce.
The Peter Leeds newsletter is one of the most popular financial publications of all time.
I always tell you that the economy is like a set of lungs. You breathe in, you breathe out. That's economic expansion, economic contraction. And usually you breathe in for longer. That's when things are going well. Everything's getting more expensive. Everything's expanding. And then when you breathe out, it's usually very short. So that's like a recession, where you have expansion of 10 years and you have a recession of a couple of years. That's the way it works. And you can't breathe in forever. Even though it feels nice to breathe in, take a big breath, you can't do it forever. And that's what happens with the economy. It eventually has to deleverage and has to shrink back a bit, just because there's limitations to how much and how quickly any economy can grow. You grow really well for a bit, and then you contract a bit. Then you grow for a bit, then you contract for a bit. And there's plenty of leading indicators that tell you that a recession is going to be here, such as the inverted yield curve, which you've had all up and down the yield curve, plenty of inversions. And meanwhile, you can look at things like manufacturing. Here's American manufacturing production. You can see that almost every month it's negative. And it's just another one of the indicators which will get a lot more pronounced when the recession begins. And I always talk about these global recessions. It's not just talking about the States here. We're talking about where are there recessions, or where are we already on the brink of a recession right now. Canada, Denmark, Ireland, Japan, Finland, Luxembourg, Iceland, South Africa, Bahrain, Estonia, Ecuador, Moldova, Luxembourg, New Zealand. That's a global recession. Everybody's getting weaker together. It all plays off of each other. And that's why all of this global slowdown in growth is going to now start moving over to the States. We're going to start feeling it even more as the United States goes into a full-blown and obvious and clearly definable recession. And you might ask, when is the recession actually going to get here in America? Because you've been talking about it for a while. Yes, I have. And guess what? It'll get here soon. Here is a chart of the quarterly GDP growth. And if you look at that trend, based on this decline of GDP, the next read would actually be in negative territory. I'm not saying it's going to be, but if it was declining at the same pace that it's already declining at, then yes, we'd be in negative territory on the next read. And remember that these quarterly GDP numbers take things into account such as federal workers being hired, military spending, which may have been in recessionary territory already, if not for the military spending and all the government hiring. So what happens when the recession actually gets here? What does that look like? How does it affect you? Well, for sure, unemployment will start rising, and you'll see that unemployment rises into the recession in a lot of cases. You'll see the unemployment starts climbing a bit until we get into recession, then it keeps on climbing throughout that period. And you're going to see more bankruptcies. There's already a big rise in bankruptcies. There's a chart of that. That's just going to continue and get more pronounced as we enter a recession. Interest rates will start to get cut by Jerome Powell and the Federal Reserve as soon as we get into the economic difficult times. Anything, if there's a recession, they're just going to create a whole bunch of new money. They're going to lower interest rates. It'll be very stimulative from both sides. But while all this is going on, the inflation rate will be coming down a little bit. As global economies slow down, there's also some deflationary factors that are bringing things down lower, like artificial intelligence. And once it starts going back higher, inflation will just keep on going towards double-digit inflation. Meanwhile, delinquencies will be on the rise, auto loan delinquencies, mortgage delinquencies, defaults. The overall quality of life for most people will decline, while the strains on the civilian population just keeps on getting greater and greater, especially when inflation starts going higher again. And yes, gold miners and silver miners are going to fall along with everything else when it all starts coming down together. But then the precious metals miners will be the first ones to recover strongly. And just before I tell you the most important thing that you need to know about this recession, I'm going to walk you through a couple of recession prep points. If you want to be prepared for what's to come, land on your feet, do a little bit better than you otherwise would have, don't get blindsided like everybody else, then you're going to want to keep some of these points in mind. Spend less money. And if you think that sounds glib, then you're going to love this next one. Save more money. You should expect difficult times ahead for the economy, and so you want to start making harder choices now rather than doing it when it's too late. Get a side hustle, rent out an extra room in your basement or above the garage. Sell unwanted things. Most of us have a whole bunch of value in our garage that we just leave there collecting cobwebs. But if you take it out and you sell some of it, there might be some value for somebody else who's going to be willing to pay for it. And I've been sharing this from the rooftops for a while now. Avoid the overvalued shares, the ones with the really high PE ratios, the ones that everybody's talking about on the news, like Nvidia, for example. Instead of the overvalued stuff, you should put a lot of focus onto undervalued things, real assets, such as precious metals. Get physical gold and physical silver if you can. Get into the mining companies that mine for that metal. And remember that they're going to be reporting their Q2 results very soon. Definitely have some investment or exposure to oil companies, especially in this economic military conflict climate. You're also going to want to do an audit of yourself. Take a look at everything. How much money do you make? How much debt do you have? How fast are you paying down debt? How quickly are you saving up? How much do you have to invest in speculative stuff? How much do you have to invest in more solid companies, ones that don't have as much volatility? Once you have your audit, then you can make a plan. Where are you going to go with all this? What are you going to do to make your hundreds of dollars turn into thousands? What are you going to do? What's your plan? What's the process? Never stop learning. Always spend time on YouTube just learning whatever you need to learn so that you land on your feet throughout this recession. It's going to be here really soon. You want to consolidate your debts. You don't want any kind of debt on the credit card. If you have a line of credit, maybe you pay off your credit cards with that because maybe the interest rate is lower for the line of credit. Give your resume a little TLC, spruce it up a bit, update it, because you never know if you're going to be looking for a job and you want to be getting ready before everybody else also realizes that they need to get ready as well. You absolutely want to keep on looking for things to invest in that will really change your life. Buying shares that you see are undervalued. Keep on doing that because this is one of the best times to be doing it. When there's blood in the streets, that's where all the opportunity lies. More millionaires made in the Great Depression than any other time in history. There's a lot of opportunities when there's blood in the streets and a lot of chaos in the streets. There's so many moving parts right now that you absolutely want to be keeping your eye on it. You want to be investing. You don't want to miss out on this wonderful moment. And if you have any debts, attack those debts. Pay them down aggressively. Make it a mission, one of your top priorities. You might want to even create a budget if that helps you. That helps a lot of people. And one of the things you're going to want to be doing is building an emergency fund. So many families don't even have a few $100s in case of an emergency. You don't want to be one of those people. You need to start saving up and building an emergency fund. There's a lot of things that are going to happen coming up soon that might be a black swan, might surprise you, and you're going to really benefit by having more savings for your emergencies. This is from Credit Karma, mistakes to avoid in a recession. And they're right with this one. They say be realistic. So many people think they could turn a few $100s into tens of thousands. You got to start smaller where you turn a few $100s into a few thousand. And then you just do it again and again and again. That's what we help all the audience for the Peter Leeds newsletter do. And here's a screenshot from the Motley Fool. Track your spending, determine what to cut back, build emergency savings, generate multiple streams of income, rebalance your portfolio, and continue to invest. The recession actually acts as a huge deleveraging. It's a recovery of financial health. We're being more financially mature and responsible because of the recession. It's not a bad thing, it's a good thing. And the number one most important thing to keep in mind is that this recession will be here and then it will be gone. And when it's gone, there's a lot of major opportunities for you as an investor. You don't want to miss out on those. For a couple bucks a month, you're supporting the channel, keeping us sponsorship free, advertisement free, independent, and we produce more and more content the more support that we receive.